record, share screen, back. Yeah, so the homework again is due 1 week from today at noon before the next class. We'll cover stuff this class. We'll cover next class. I'll also do a review so you'll know exactly, effectively what type of stuff is on the exam for how many points and even in what order. And again, the homework is due before class starts. And there's probably, hopefully less than half the class that hasn't started. But we'll check. And again, if you don't do the homework, normally that tells me that you're not going to do good on the exam because the percentage relationship between how someone does on homework and how they do on the exam is above 80%. I've proven it semester after semester. And then on top of that, regardless of it, you're not getting the homework points. It's impossible to get an A in here. You just can't, based on points. You're, I think, a mid-B at best. And trust me, you won't get a mid-B because I've never had people that don't do homework that gets a good grade. It just doesn't happen. Okay? So, enough said on that. What I want to do is go back to what we should be able to do already. We've done it enough times, well, let's do it again. To create your cheat sheet for the test. Meaning, when the test is handed out to you, if I were you, this is exactly what I'd write on it. So, let's intersperse back and forth. What exactly would you write on it? Oh, that is okay, okay. What are the two financial statements? Name one. Balance sheet, otherwise known as BS. What's the other one? Income statement. What are the three categories of accounts on the balance sheet? Right? First one, asset. Second one, the last one. Another thing for net worth. Can you help them? Owner's equity. You'll have it within a week, right? Okay. That's the benefit. You don't lose points for it. I'm just getting people involved. You know, trying to get you to remember. You want to be able to do this because if you can do this, you can do well on the test. What is the accounting equation, sir?
Asset is equal to liability plus.
Yep. Thank you. Okay. Now, what is the first category of account on the income statement? Revenue. And the second one?
Expense.
So this total for total assets will equal the amount for liabilities and owner's equity added together, right? Number equal number. That's just implied. How do you increase an asset? How do you increase an expense? How do you increase the other three categories? Give me a name of any account and what it goes under, just one. Think of anything at all.
Account payable.
Accounts payable, that would fall under which of the five categories? Liability, so accounts payable is liability. Sir, you pick another one. Cash, what kind of category of account is that? Asset. So, how would you increase cash? Tap on behind you, staring at his laptop. How would you increase cash? He said it's an asset. Yeah, see how easy it is? How would you decrease cash? Huh? Credit, yeah, okay. I couldn't quite hear you with the mask, so I had to have you say it again. Oh, you did? Oh, I couldn't see, and I didn't know that. Okay. She said accounts payable is a liability. How do you increase accounts payable? How do you increase the liability? She said it's here. How do you increase it? Yeah. Yep. How do you decrease accounts payable? Credit. Debit, yeah, okay. There, we've covered those. Name another account, any account, not cash or accounts payable. It can be any 5 categories, just name one. Pick a category. Utility. What's the word after utility? Utility expense, because you could have said utility payable. That's why I had to wait. I'm like, give me the last word, because it changes. What category would utility expense be? It'd be an expense. How do you increase an expense? Debit the expense. How do you decrease an expense? We have not done owner's equity, which is fine. Name a revenue account. No, that would be the owner's equity one. But think of a revenue. If you had a business, what would be another term for revenue to you? When you get money coming in from a business, how do you make money? Yeah, but how do you make money? How do you get someone to give you money? Absent your business being a robber, if you actually have a legal business, how would you get someone to give you money? Right, but what would you say you're doing? You're doing what? You're doing work. A service, so it'd be service revenue, or it could be what? If you're doing a product instead of a service, sales revenue, right? But they like to do service fees earned here. I don't care what you call it. Fair enough? They're both the same thing in my book. So if it's a revenue account, meaning you made a sale, how do you increase the sale? So if you had a sales return, reducing sales, reducing revenue, how would you reduce revenue? You see, every category of account we just explained from that little bit. Now, the only difference is how do you create the statements? Know what the account names fit under, and you're good. We use trial balance as an example. The last one you have here is, as you had said, capital account. That ends the balance sheet. The revenue account starts the income statement if you have a trial balance. If I don't give you a trial balance and just give you a bunch of names, you need to know which ones are asset, liability, equity, or revenue or expense to be able to make the right statement from it. Fair enough? If it's on the wrong statement and I didn't ask you to make that statement, what do you do with that? I personally line through it and not look at the word again. So if I ask you to give me a balance sheet and I just give you a bunch of account names and dollar amounts, if one of them was revenue or expense, I just line through revenue and line through expense and no longer look at it. So why would I give you that? To make sure you know the difference, and it's a sucker play to get things wrong because you're not paying attention. You don't have to use everything I give you, just what you need. Which tells me you understand stuff because you knew what you needed. Fair enough? So this, it's not in any book directly this way, shows you how to do almost everything. And you all created it, not me. I designed it originally, but I just back and forth. If you can draw this on your own, you'll realize where you should be sitting pretty for the exam. So we're going to hit some more journal entries in that. But first, I think you may not have been, but you said accounts payable. Someone tell me why you might get an accounts payable. Why accounts payable might go up. Meaning why you might owe someone. Why would you owe someone as a business? Yes, sir. Okay, so in other words, you gave credit and they would have given you what? a service, or a product. Yeah. So let's say what they gave you was some supplies. If they just handed you the supplies and you went back to your office with the supplies, we're not looking from their perspective, we're looking from yours. If you go back to your office with the supplies, did you use any supplies yet? No, so they're all there. So we're not saying supplies expense, right? We're saying supplies as an asset. So if supplies is an asset and you were given them, did supplies go up or down? And what type of account is supplies? An asset. So assets went up, you would debit supplies. For how much in the back? How much did you debit supplies for? And hint, you're picking the number out of the air, or go like that, just pull it out. 100, thank you. This is called interaction. Now, you said it went up, so that's debiting it. Debits have to equal credits, so you're going to credit 100 also, right? Now, we said you did it on a liability, which meant we'd put accounts payable here. Abbreviated A/P as a credit. I know some of you can't see it, so just jump up in the air, but you get the point. You credit accounts payable. That means crediting accounts payable increases. Yep, we said we increased our liability. Guess what? It worked. And it's all paint by number if you think about it. That's called doing a journal entry. If you have this little bit down, everything should be rather simple for you on the test. You're just simply applying it if it makes sense. You catch the point? The only thing you have to remember is debit means left, so this is to the left, and credit means right, so that's to the right. You indent credits. Left stays against the wall, you indent the credit because it goes to the right. That's how it's supposed to look. Debit and credit doesn't mean increase, decrease. It's only when you add the word to the category that it matters. Because we just said here, debit is a minus. And credit is a minus here, but it's a plus there. It starts looking really confusing if you write them all out. But if you only put how to increase it, which is a normal type of account, it stays simple. It's not cluttered. Because if you know one way, well, guess what? The other is the opposite. A plus here is a debit, so then a minus, there's a credit. Plus here's a credit, okay, well then if we are decreasing it, that means debit the liability. You catch it? Just imply the opposite. Yes, sir.
The company pays some cash in selling expenses.
If the company pays
Cash in selling
cash,
expenses.
okay,
Is it debit or credit?
let's put it this way. You're the company that paid it? Think of it this way. I'm pretending to be you. I take out 40 bucks and I'm paying someone, right? So I give the 40, I don't have it anymore. Did my cash go up or down? Cash went down. Cash is what type of an account? Which of the 5 categories? Asset. Paint by number. Do it this way. If you can write this and memorize that. Paint by number. Asset went down. But what does this say here? DR plus. We said it's supposed to be a minus. It went down. See, credit cash. We don't know what we debit yet. What do we pay cash for? Was it a utility bill or did we buy something with it?
It was selling expenses.
Oh, okay, so we have some of expense. An expense increased, right? Look at that. We debit the selling expense. I think that's what you said. So if you debit selling expense and you credit cash, guess what? There's another journal entry. You just gave the answer. And I didn't give a single one to you. You said them all. You asked me the question, then you answered your own question. By doing what? Looking at this little bit, think of what you do know and do a paint by number. Just let it keep walking you through it. Make a lot of sense now that you asked a question, you answered it just using this little bit and you got it all right. That was 4 points. Cash, selling expense, we just didn't put a dollar amount. That'd be the other 2 points. Because you get, we said $40. Yeah, I took out 2 20s. Fair enough? The weird part is I taught you most of this course already. But don't worry. You already saw how to make an income statement and balance sheet. When you start BCOR214, which is accounting principles 2, the first test, which is 1/4 of that course, we'll be making the financial statements again. By that time, you know what that really means? Yeah, I can do it again. I mean, I already did on the first test here. You know, it's like, okay, now it's the first test in the next semester. Follow my point? The last 3 tests, meaning the last 75% of that course, becomes managerial accounting, like cost accounting, like how do you check costs and all that kind of stuff. We don't do costs in here. We just do journal entries. Okay? Because the last 3/4 of principles 215 is internal thought process and what you're doing. Everything we're doing here is for creating reports for external. Now, management may look at it too, but they really want to focus on the inside stuff. Okay? So ready to start doing some of the homework for the last chapter? Let's see who all is not signed into it yet. One student submitted already. Didn't look to see grades, but let me recount just for the fun of it. I'm not going to embarrass anyone, but one, like let's just take away 1, 2, 3. Five and 4 is 19 and 1 is 20. And we have 27 students in here. I'm guessing there's 7 people that haven't even logged into the homework stuff yet. Oh, yeah, I'm right. Look at that. Imagine. You follow my point? Yeah. So there's 7. So I'm actually relatively happy. You know, that means that 75% of you roughly have logged in at least. My hint? Work on it, right? Fair enough? Okay. That loves to not let me do that. Why in this class only? It's only in this class I can't move that thing. All my others, it lets me move it around and everything. Now it lets me, okay. So you guys that are online will need to speak up. Okay, there, let's do it that way. To be able to answer anything or ask questions. The volume is on. So Pablo Management has 6 employees. Each of them earns oh wait, we did this one already. That's right, never mind, we did this one, right? You remember it? Last time where it's like, okay, how many days and so forth. So, next. All of these here can be solved 2 different ways. Or multiple ways. What you're really saying here is you have supplies. Beginning, just like any account, beginning what was added to it, they call it purchases, gives you the total amount that's available to use, you'll be going through this like crazy when you get to cost accounting. Last 3/4 of 215, you do that like crazy. Beginning, what you add to it, or this times purchases, gives you what's available. Then you can subtract what you used, or you could say what the bottom is. I normally put that above there. I don't like how they did it. This is their solution. I would always flip these. So what I'm saying is this, I'll write on the other side, this is what I would do. The video is not moving at all. So I'll put it like this. No clue why it's not. Doesn't really matter which account we're talking about. All accounts work like this. Beginning, what you added to it, which in this case they call purchases, gives you what's available. What you take away from it, which could have been sold, used, transferred, whatever you want to call it, gives you ending. Now, one little difference is what we're writing here. This is a normal debit account. So the middle three categories, liabilities, owner's equity, and revenue. Ending could be here, beginning would be there. You follow my point? But otherwise, it's the same. I'm doing it as a debit account. So, failed to detect your microphone. Of course it did. Yeah, checking. Good enough. It checked. It worked. Okay. So, if you look how I wrote it, 675 plus 4,725 gives you available 5,400. So you'd be saying this is 5,400. What they're wanting is how much you transferred out or how much you expended. So you have available and ending. That current end of year, supplies available end of year becomes negative, which is kind of weird. You have negative supplies. Okay, we'll go with it. I've never heard of negative supplies, but okay. I think that's because it's algorithmic. You know, they make it mathematically work. Have any of you had negative supplies? Yeah, but it just worked. You follow my point? That's algorithmic. It just doesn't make sense too much. So then, how much did you expend? Well, if you have 4,500 and you need to get to minus 125, it's going to end up being 45, it'd be 56 and a quarter. Oh. I think that's how they're going to want it. Oh, they didn't say that's it. Oh, okay. No, I read it wrong. Okay. Back to work. I just realized that I read it wrong. When I was walking across, I read it one way. Current year end. No, that isn't. That's how it should end up working. Wait, it didn't like that sign. It gave the full answer. It didn't like me using brackets for negative. It wanted a minus sign. I'm like, really? I'm like, because I went back, I'm like, no, I read it right. And then I go back and there's this. So there's what it shows. It gave, I'm betting. No, it's not. Okay. Return the question. 675, and that is 44, 54, 50, available at the year end is minus 120. How can you? That makes no sense at all. They're having all the supplies available at current year end being negative. You can't have negative supplies. Okay, let's do this. Save and exit now, come back in, preview, and see what they're trying to say, because it makes no sense what they're saying here. And I did this thing before, but it didn't show it this way, because I did part of that last time. So now it's still changed the numbers, but those minus numbers make no sense. That should be positive. It's still messing with it, because that should be positive number. You can't have a negative supply. So I guess you have to work with that. It's just a messed up within their program. You know what I mean? What they're trying to say is at the end, it's a negative number. It can't be a negative number for supplies. And that is this number. They're saying what number goes there. But if it's negative, you'd actually have to have that. This number, they subtract that to get that number. No, it's and an additional because they have it as a negative, but never mind. It's just a messed up problem. I'll have to mention that to the publisher, saying that is terrible. So here's what I'm going to say, and I'm going to show you how it should be solved. This should be solved this way only if this said positive and this is 1,075 here, positive 1,075. Then here would be minus 3,925. This should be the negative row, and this should be the positive row. They flip the signs. I have no clue why. Fair enough? Sorry about that. Okay, on to journal entries. So I'm hoping they still can see on screen. I haven't heard them say anything because I can't see chats when we're doing this. On April 1st, the company, good, excellent, good. On April 1st, the company hired an attorney for a flat monthly fee of $1,500. Payment for April legal services was made by the company on May 12th. It says above, the C37 required adjusting journal entries to prepare the financial statement within April 30th. For each situation, said both the April 30th adjustment and the subsequent entry during May record the payment of the accrued expense. So what they're giving with this journal entry is a little bit trickier, and what it's saying is that you hired an attorney for $1,500, but you didn't pay them. But they did their work, right? For the month of April, you hired them. April finished, so they did their work. It's now May that you're going to pay them. At the end of April, what do you have? Think of it this way.
Legal services expense.
Yes, legal services. You have legal services. That's the key to it, but you still owe them, right? Save in accounts payable. And accounts payable that increases is a what? You credit it. So we'd say this one. Oh wait, who are we doing this for? It says a receipt. Well, let me see. Company hired attorney, so we're not the attorney. Oh, that's because I scrolled down. Legal services payable. We said the amount is $1,500. So it shows you have the expense, but it's done with the payable. And you got it. So see the one online said it. I just put it into reading this and saying what happened. The expense went up, you debited. Payable went up, you credited. You got the first answer. That makes sense to everyone? Because on the first problem is you got paid, they're talking about 120 or whatever a day, you had 5 people. So many days had passed, so you worked, but you didn't get paid yet, so they became a wages payable. No, 3. Wait, we didn't finish all of that one. A, it's not letting me get to B and C. Okay, that's why. Okay. Oh, that's what they want us to do. Okay, I just didn't see it before. Record the payment of legal services. Guess what? Debits equal credit, and it was 1,500, so I already know that. And you're going to pay for the legal service. So legal service is going to be one of the ones, whether it's an expense or whatnot. But I always like to do this. I don't care about the order. I always handle cash first, because if you don't know what you're doing with cash, just like you asked me about cash, if you don't know what you're doing with cash, you probably don't know what you're doing with anything, right? So you paid them with cash. Did cash go up or down? Well, first, what type of account is cash? Asset. Most common asset. Did it go up or down when you paid someone? So you're crediting cash. And you know it was 1,500, it stayed the same. So now you're just saying, okay, what is the other words I want to use? And in this one, they said it was the legal services. So we recorded the expense last month. Would you record the expense again when you actually paid it? No, you don't count it twice. But what did you record last month? You recorded that you owed someone the legal expense, right? What do you call that? When you owe someone money. It was your expense. It's your thing. First thing I asked you today. An accounts payable. What was the account? This one was a legal service payable. So if we paid them, we don't want to leave the legal service payable on the books. We have to get rid of it. A payable is a liability. It's on the books from last month saying legal service payable. If we paid it, we don't pay it, we don't owe them anymore, right? So we have to decrease it. Credits this, so we have to debit it. So legal service payable. Now the legal service payable is gone. You check the work, you'll see that it's going to be correct. Now, why it doesn't show this list again, I have to press an X there. I have no clue. So we're on to 3. Record the payment of interest. Interest is this, a note payable, a full interest payment of $6 on the note is due on May 20th. This is April 30th. And it says record. Oh, I skipped. I was going, why would you record the payment when it didn't happen? I jumped ahead one. As of April 30th, this interest expense had occurred. Okay. Interest expense occurred, increase or debiting interest expense. And it's 2133. Now, without trying to figure out what the credit is, you know what you just did by the simple thing. You said it's an interest expense, so I looked up that word. We knew it went up. We know expense goes up by debiting, so we debited interest expense, and we put the dollar amount in, the appropriate one. You know what you just did by doing that? You did the easiest part of the question, and you just got 3/4 of the points. You have 3 of the 4 points already. Now the question is, can you get the 4th point? Because if you do the simple thing, you already have 75%. That's a C already. You get the last one, now you have a perfect score. So the last thing is, what do we put here? Well, it says it accrued, meaning the time passed, you owe the interest, you just don't have to pay it yet, but you owe it. Just like work. Problem number one, you worked and didn't get paid yet. So what do you call it when you owe somebody you didn't pay them yet? You said it at the very beginning. But it's called what? A payable. The question is what type of payable? But it's a liability. To increase a liability is a what? Hey, that looks like we're on the right track for words. So we're going to say it's a payable. And the only thing we're talking about here is interest expense. So instead of saying interest, you'd have interest payable. See how this is working? You know what this is also called? Journal entries.
One question.
Yeah, there's 4 parts to it. Or actually, no, there'd be 6 parts to it. Because now it says pay the interest. If we have a payable and you pay it, do you still have a payable? So we have a credit there and a payable. Legal services, oh, we did that one, 3. When I check my work, it makes me go back to the beginning. We have an interest payable. We didn't pay it yet. The next thing it's going to enforce us to pay it. So if we pay it, guess what we're getting rid of? The payable. If it's a credit, how do you get rid of a credit? How do you decrease the credit? Use the same account and debit it. What they're saying is if you think of it as a T account, not percent, interest, I just abridging it, payable. Right now it's 2133. We want it to be a whopping 0 because we're paying it. If this is 2133, how do you make that become a 0? Without putting a minus sign anywhere. That's what we got to do. That's called debiting interest payable. So let's do it. We just did it with the other, with legal expense. Now we're doing it with this. So we go to 4. Interest payable. 2133. 2133. And what did we say we paid them with? Cash. Oh. How can 2133 not be, wait, okay, return the question. Maybe I got to read it closer. That's rushing. Let me see what it says. Number 4. That's a payment of interest. Wait, are we paying all of it? Let me see. May 20th. That's the adjusting entry. Oh, that's a trick one. This is the amount of interest we owed as of April 30th. It said the full interest payment, 6 on the notice due on May 20th. When it said next time, record the payment of the interest, they mean the interest on the whole note. So it's going to be $6,400. Okay. A little trick to it. It wasn't just pay the interest. It said record the payment for May 20th is what they should have said. You follow my point? They didn't properly disclose. They said record that pay that interest. You could have paid it on the 1st, but technically you're not paying until it's due. Now I get what they're saying. So 6,400. Now the interest expense for this month is the difference. 267. That's what I believe they're implying from that. Yep. You see the slight trick to it? I don't like how they worded that. Most of the other places would have said, record the payment as of May 20th, not record payment of interest. Well, the interest you had was this. They didn't mean do it on May 1st. They meant May 20th, which means the whole thing. May 1st, you'd only done that. So it's actually having to understand what they're saying. When I do it on the test, I'm very precise. You know exactly what I mean. You have to try and read into it. There's no confusion. I'm like, record the payment as of this day, you know. That was like implying they're on May 20th, not May 1st. Total weekly sales expense for all employees is $15,000. The amount is to be paid at the end of the day on Friday of each 5-day work week. That was just like question 1. And April 30th falls on a Tuesday, which means you got 2 days in, which means employees work 2 days since the last payday. The next payday is May 3rd. So you have 2 days in. So you have 2/5. 5 goes 15, 3,000, right? Okay. And you have 2 of those. $6,000. Everyone see where I got $6,000? We said we're going to have a payable, payables liability, so you're crediting the payable, and that's going to be salaries payable, I think is the word that they're using. And then that's just like we did before, salaries expense. Good? Report the payment. I already know the trick to it. They mean not the payment of the 2 days, but payment when it's actually due, which would be the Friday. So by implication, they're saying record the payment of everything, which would be 15 grand. Okay, so now I'll sit there and record the payment of 15,000. And then the last one we had was 6,000. That gets rid of the salaries payable, and this we said was cash, which means we have salaries expense for the difference for this period, and that would be 9,000. You know where I got 9,000? Everyone see it? You know where I got 9,000 from? It said you're paying 15. 9 is the difference to make debits and credits equal, so 9,000 is the expense for this month. The 3 days that people worked. I know what you're thinking. This makes it very tough to do the homework when the teacher's actually doing it and explaining it to you step by step in class, right? But don't worry, if you wait to the end, you'll find that it's not as easy, because what I'm doing is I'm using the numbers they give. I can switch and do the ones where it actually comes from the book so you can see the exact numbers. But this way it's visualizing. The problem is when I do the book, then I got to do a PDF reader and all that, which I'll see that next time and see if you like it better that way. Okay? Because what you see here, like this question 4, which I'm going to take a minute for, it says depreciation on the company's equipment. And we are chapter 3. And this I just want to take a second to show you. A, B, C, D, E, F. If you go to page 112 in the book, page 112, exercise 3-6. It says, prepare the journal entries. Well, I was going to say, hey, part of that's the same. Oh, the first two lines, then C. Oh, they changed up. So actually, A and B is exactly like in the book. It has these exact words. All of these words are the same. And exercise 3-6 in the book at the end of the chapter 3. 3-6 letter A has 18,000, B has 6,000. But C, the $320 and 378 in the book, it has 6,000 and 1,100. Remember, I told you all this is algorithmic. This is actually at the end of our chapter, exercise 3-6. So if we took a second, and what I will do is, it's not letting me go back. I'll leave it there. To do this without changing it, I got to sign in again. So give me a second. I know I might lose the people online for a second, but I'll pull them back in. Exercise 3-6 is in this PowerPoint. This is exercise 3-6. That has the 18,000, the 6,000, the 1,100. You know, you see the dollar amounts. This is at the end of it. So it is there and you can look at it. Why I'm telling you this is what I'm going through in class. I did a bunch of these, not all, but I gave a lot where you can look at it. If you match it up, this is homework problem, what, 5 and 6 or whatever, the last two in the homework. This is the last homework grouping. You can pull up my sample document that's in our course content test 1 material. Internet connection is unstable, yeah. Well, I've been told I'm unstable too, but hey, you can deal with it, right? I wasn't told. I was kidding. That's sarcasm. I had one look like, what? No, I was kidding. But if you want to look through it, you can look at this. It keeps the numbers at the end of the book. Because what I'm doing in class, if you wrote it down, it's not doing good unless you're watching it on video. Because when you open it, your numbers are changing. You catch that? So I can go through and do it just like the numbers in the back of the book. I was doing where you can see how I'm actually dropping down and solving like you will. A lot of people sometimes say, no, stay with this so the numbers aren't changing. We can, if I take notes, I can look to this and see the notes. So I'll wait and ask you next class which way you like it. Fair enough? Because I'll do it either way. It doesn't matter to me. I've been doing this stuff for years. I don't care which way I do it. I don't care if it gives me numbers I don't even know the answer to and I work through the answer. So I'll minimize that. Stop share for a second. Come on, why is it? Start video. I don't know what the video went on. Chat, what's this? Okay, oh, the question that it had is, do we have to do a journal on the test? You have to do journal entries. You won't be creating a journal, but you will be doing journal entries just like we're doing here. Debits and credits. And I already said on the test, you're going to have to prepare a balance sheet based on, I believe that one I'm doing it based on account information, like a multiple account names, and I'll probably have some income statement names that you disregard. Then you also have to know the difference of whether something's on the balance sheet or income statement, meaning the categories. These three are balance sheet, those two are income statement, which implies you had to know it before anyways. And then you have to be able to do the revenue, say whether it's a revenue, expense, asset, liability, owner, equity. So that's like 67, 2/3 of the test, and 1/3 of it's doing the journal entries like we've been doing today. And that's your test. Okay? So, getting back over, oh wait, did I do share screen? Come on. Work with me, share screen. And I think I'm doing this part now. Oh, no, it wasn't. I was doing the other. Stop share. Oh, I know what I got to do. Share screen. And I need to be here where I can do, I think this is Word, and click on this. There we are. So, question 4 has 1 through 6. This one, depreciate the company's equipment is for year end. And what did I put on me? Okay. Depreciation of the company's equipment for year end is computed to be $18,000. So you have depreciation. Depreciation, you remember what depreciation is? I mentioned it before. That's accounting term for pretending as if something's wasting away. It makes a lot more sense when you're not talking about a building and you're talking more about a car. You would realize that if you get a brand new car, you drive it off the lot, the value drops, right? Also, the more miles you put on the car, the more it wears down, the closer it is for you to need brakes, replacing the tires, maybe a tune-up, spark plug. Make sense? Because you're using it, eventually you're wearing it down, you need to replace things. That's an accounting mechanism that's supposed to roughly, generically approximate what you need to set aside to be able to cover these expenses and or replace the asset. Fair enough? Nobody considers the wasting away and saying you're going to need to replace again. It doesn't make as much sense when you're talking a building because, okay, after 30 years, you depreciate the building, but it's still standing there. It's worth a lot of money and value went up. So we'll just talk about vehicles. But it's the same concept. Fair enough? That's depreciation. So what they're really saying is you're creating an expense that you are planning to pay, but you don't really have to pay. It's a planning mechanism. So what they do is they say, okay, we increased the depreciation expense. That means you debited depreciation expense. And what you credit is just what's called accumulated. The tricky part to that is accumulated depreciation falls in the asset category only because it has to keep track of it. It's really a contra asset. That's a unique one. All the assets are good things. Accumulated depreciation is just a tracking mechanism. It's a contra asset. What you have is you have what you bought the, say, car for, equipment for. You keep accumulated depreciation right underneath it, and then you net the two, meaning take what you bought it for, subtract accumulated depreciation gives you the net value of the equipment, meaning what you expect it to be worth. Even though you get it appraised, it's totally different. This is just accounting mechanism. Fair enough? So that's why you're actually debiting it. It's increasing an account, but even though it's a contra account, meaning it's an opposite. It's a negative asset. I'm not doing that one to you yet, but we're covering it. That'll be in a later test. But just showing you how you do it. And this is 18,000. Two, prepaid insurance account had 6,000 debit balance at the end of the year before adjusting the cost of any expired coverage. It showed $1,550 of unexpired insurance coverage remains. Okay, so it's saying you have so much that still remains of this insurance. Prepaid insurance, remember, is an asset. So it said you had 6,000, but now it's down to $1,550. It was 6. So you needed to decrease it down to $1,550. If it was 6, to decrease the prepaid, you'd have That should prepaid insurance, okay. And it was at 6, you need it to be 1,550, that'd be 4,450. Right? 4,450 and 1,550 gives you 6,000. You would have decreased prepaid insurance, an asset. That drops down the prepaid. Does that make sense to everyone? Prepaid's an asset. It was at 6. You want it to go down to 1,550. You don't debit it, you credit it. So you credit that same name for what you need to go down by, which is this. 6,000 minus 4,450 gives you 1,550. So you have to debit the same thing. Debits equal credits. Now the question becomes, what did you get? Nothing, right? Time passed, you lost some prepaid insurance. In other words, there's insurance expense. Does that make sense to people? Did you spray the tables yet? Could you do that today? Everyone wait for a second, let them do that. We're ending for the day, so I'm stopping share. We'll finish this in this homework. Next class, we'll do a review and we'll see if there's any other questions.